and far right, I would like to request my friend Dr. Abdus Sattar Abbasi to share his views in this introductory statement of about 2 minutes, and then I would go to my next panel and then going to my left. So Dr. Abdus Sattar Abbasi.
Thank you very much, Professor Da, and thank you, Minhaj University, for arranging this conference and the panel discussion. So when we look at global challenges and approaches which globally actually evolving, we reach to the conclusion that we as human beings have grown. We have grown intellectually, aesthetically, and emotionally. Now we do relate to the broader challenges of mankind. It is because of this maturity that we are now considering options for investing in ventures having potential to contribute to the well-being of society, addressing pressing global challenges such as poverty, environmental degradation, illiteracy, contaminations, and scarcity of resources. However, we are still caught with the dichotomy of impact and return when it comes to investing. Making an impact involves stopping ignoring our world's problems and making even a small contribution towards a better future. It is to join the movement of like-minded, compassionate people who realize that they have to act now together to have a better future tomorrow. A recently published Oxford Faith-Aligned Impact Finance report identified significant opportunities for faith-aligned capital to create an impact in climate-focused investing, ESG or SRI initiatives. For those who are not from finance background, ESG stands for environment, social and governance, and SRI stands for social responsible investing. So the faith-aligned finance and impact investing map 360 separate organizations connected to Abrahamic, Dharmic, and other religions. Total net assets mapped are valued at approximately $5 trillion. And the breakdown is Christian aligned capital, $260 million, Islamic sovereign capital, around $3 trillion, Islamic private finance, almost $1 trillion, Dharmic capital, $300 billion, and Jewish capital, $16 billion. According to the report, only 3% is specifically attributed to impact creation or socially responsible investing or ESG. For Christian funds, this number is 1%, while for Islamic funds, it is 3.22%. Impact investing represents between 0.6 and 2% of global assets under management, suggesting perhaps that Islamic finance may be ahead of the global average. So initial interviews in this report aimed at understanding why more faith-aligned capital was not being used to create impact found that there is likely a significant number of investment decision makers in the faith world that also prioritize return and do not necessarily accept that faith-aligned capital should be treated any differently than other capital when it comes to investment. In other cases, there appear to be religious objections, which prevails in our society as well, to generating a return when the intention is to create impact. This is what we actually say, that if we belong to Islamic banking industry and if we wish to invest, then why we are expecting the return? So it should be voluntary. So impact investment has been defined as investments made with the intention to generate positive and measurable social and environmental impact alongside a financial return. Impact investments can be made in both emerging and developed markets and target a range of returns from below market to market rate depending on investors' strategic goals. Report further suggests millennials, about 45% of whom consider social responsibility a factor in investment decision making, and also state a desire to invest their funds to help others. So the young generation will, over the next 10 years, be benefiting from trillions of dollars available in this specific segment. And importantly, 90% of women investors believe in making a positive impact on society. An exciting spectrum for sustainable investment aligned with SDGs has been delineated while identifying 3 categories. Number 1, impact only. Number 2, impact first. And number 3, finance first with expected returns. So impact only is about grants and philanthropy, so it is beyond today's discussion. Surprising, the market size for impact first has been showed in billions of dollars with expected returns up to 11%. In the category of finance first, sustainable investment spectrum has the potential of trillions of dollars with expected returns as high as 18%. So report concludes that a greater movement of capital towards impact creation is about to take place with faith-aligned actors potentially leading the way. Therefore, Islamic finance has enormous potential to tackle global challenges and occupy central place in evolving dynamics of financial industry. Thank you very much.